Everyone is wondering what is happening with interest rates. I have Carlos Cepeda with US Bank, who's also one of my favorite lenders, to explain it to us. So we're at about, 6-ish% right now. What is happening and what can people expect in the next couple weeks?
So great question. It's been very volatile to start the spring and summer seasons. Right now, interest rates are moving in a direction that 1 week we're high, 1 week we're low, and it's just simply because we don't have a direction of where we're really seeing the economy improve or where we're seeing the economy retract. So that being said, I think right now what we can really concentrate on is day to day, where we are with day to day. So today, interest rates right now are hovering right around anywhere between 6.25% and 6.5%. And that's going to be covering conventional conforming up to 726, or even our portfolio lending all the way up to $2 million. Once we get above that threshold, there's different wealth products and other things that can kind of help interest rates in that way. But I think if a client wants to look at what do I qualify, I would say be conservative, use 6.5%.
Okay. And I always tell buyers, when they're working with you, just stay in touch with you because,
Correct.
The interest rates aren't what they were a couple years ago, but to your point, it could change each day and that's when you lock them in, right?
Right. That's a really good talking point. Something that I really love for my buyers to do, and I work with my agent, specifically you and a client that we're working with right now. I try to keep up to date with them every 3 to 5 days. Say, hey guys, this is where the interest rates are, because look, if you stay out of touch for 30 days and they were hoping to get that 5.5% rate, and now something changes with inflation data, something changes with weather, who knows what's changing this market? Everything is so fickle and so emotional. It's just a hot topic right now, is that rates could jump up 1%. And that changes somebody's buying power. That it's not so much the buying power of them saying, I can't afford it. In some cases that is, but also it changes the psychology of it, which that's a bigger hurdle. Because if you can't afford it, you can't afford it. It's kind of a cut and clear, you move off. But if it's the psychology of it, the emotion of it, like I was really hoping my all-in payment was $5,000, now it's $6,500. Where do you find that extra money?
Right.
What can you do? And with prices seemingly, to kick back to you, they don't seem to come down. They seem to stay flat. They seem to go higher.
Right, definitely
just depends,
higher.
And it's one of those, if you find the right property, you have to be positioned to really be all in so that you can write the most aggressive offer.
Over the course of the summer, what do you predict will happen with interest rates?
Gosh, I love that question. Right?
Do you have a crystal ball?
It lets me be a tarot card reader for the moment. So honestly, what I see with interest rates, what's going to happen is coming next week, and we will see very big information. We have a Fed meeting that's happening on the 13th and 14th that it's going to be their time to really make a decision. Are we going to continue to raise interest rates? Now, that doesn't directly affect mortgage rates, right? That indirectly does. That is the federal fund rate, where banks and everyone else is borrowing funds against, and kind of the standard of where money is. Also, you have inflation data. Inflation's been coming down, but federal fund rate's been going up. So you have this kind of rubber meets the road moment right now. We need to see what's going to happen next week to really get a clear picture. But if you were to say, Carlos, are you a betting person? 100% I am. I would bet that rates should start to stabilize and in fact improve within the next 60 to 120 days. So I would say by August, we could see rates back into the fives, mid to high fives, with banks. Every lender, every bank, every institution is going to be different. I can only speak for US Bank. We're well positioned, and I can say that our rates have been competitive, in some cases very aggressive, and in some cases we've had to retract. But I would say overall, interest rates should improve in the next 30, 60, 90, 120 days incrementally. We're not going to see this big jump where folks see the 2.5%, 3%, 3.5%. That I don't know when that can happen, if that does happen. But do I see 5.5% in our future? Yes. Through my crystal ball, clouds have cleared. I do see that happening.
And why is it, I send a lot of clients too, because you often do have the best rates. Why is that with a big institution like US Bank?
The truth is that we are not just positioned to only work with the conventional conforming platform, meaning we don't have to send everything to Fannie Mae and Freddie Mac that are truly controlled by where government is. We have our own funds. We are a bank. We are a portfolio institution. So we use the money that's deposited, we recirculate it, and we push it back out, right? So we can see a position to say, hey, this loan makes sense at this rate because it rates a margin of return. There's profitability for both sides, because there has to be a win-win on everybody. In the days of the 2.5% and 3%, there wasn't a lot of win-win. It was win for the buyer, win for the seller, banks were kind of like, well, this is just where money is, so we're just going to keep circulating
that's
out.
why some have shut down.
Correct. And also, too, there was just a big circulation of money coming in from the government. There's no money coming in right now. So it's just, where's your money at? So what US Bank has the option is that we can portfolio our loans. The big thing else, too, is although we sell loans to Fannie and Freddie, 100% of our book is serviced by US Bank. So your loan's not going to be sold off. It doesn't mean that we're selling your loan. No, it means that we're servicing it from start to finish it. So you work with US Bank throughout. So that allows us to make funds on the servicing rights, make funds on the origination rights, and doesn't have to go and chase money to go collect money from someone else.
Which also I think as a consumer is good when you get that first mortgage statement. You know who it's coming from. Right. A lot of times you get switched.
Correct. And that's, I had that conversation. I'm glad you brought that up. A lot of clients call me and their heart drops. They're saying like, I was working with so-and-so and it got sold to this company and that company and this company. And it doesn't mean that your rate can change. Your note rate is a legal document that's tied to the term of the loan. But it does mean that some mistakes can happen. And I've heard the horror stories of this servicing company had it transferred to this servicing company, my payment didn't make it on time. And the worst thing that could possibly happen is you get a 30-day late on your mortgage. Now your credit's impacted. Now your ability to get credit is impacted. Can that change? Yes, but nobody wants to sit there and argue and waste 3, 4, 5 hours waiting on hold trying to fix something that you didn't cause. So we alleviate that at US Bank. We are a portfolio lender, so we service our loans, we portfolio package them. So when you say, why are our rates more competitive? It's because we just have a more compelling product line to actually go out. Our product line is expansive. It really allows us to full service somebody who's buying a $200,000 house, somebody who's buying a $20 million house. We have that product for them.
Awesome. Well, thank you so much for explaining it. I know it's a lot to think about if you're thinking about jumping into the market and what the interest rates are doing. I can always put you in touch with Carlos if you are thinking of making an investment and you need to do financing. I'm Kelly LeClaire. This is Carlos Cepeda. Thanks for watching.